This video is for entertainment purposes only and is not financial advice. Hey guys, welcome back to another video. My name is Josh. In today's video, we'll be doing a Q&A video. I'll be answering some of the questions that you guys have asked me on my YouTube community post, asking for any questions you guys might have. Because, we recently hit 10,000 subscribers. So I want to say a huge thank you to all of you guys who have joined in on the channel, who have subscribed and shared my videos with others. But I thought I want to do a Q&A. This is my first time dedicating a specific video to Q&A. And what better time to do that than hitting 10,000. So if this goes well, we can maybe do more of this in the future. All right, so let's get right into the questions. The first one comes from Ray. This is quite a long question, so I'll break it down into a few different sections. The first section is, are you still using Sharesies platform for companies, invest now for funds? Have you found this works best for you in terms of fees, and what are your funds of choice? I think Sharesies is the best platform for Kiwis at the moment to buy New Zealand stocks because they have the lowest fees. And in terms of invest now, they don't have any transaction fees to buy ETFs. So that would be my preferred choice if I were to invest in funds, but personally I don't. So, but if I did, I would use invest now. And in terms of funds of choice, I would go with a broad-based index fund. So for example, the S&P 500, the NZX 50, and the ASX 200. So I'd put a mix of them together into a portfolio. And the reason for that is because the NZX 50 and the ASX 200 provide different sort of allocations to different industries compared to the S&P 500, which is more tech heavy, compared to ASX 200, which is more financials and mining, and the NZX 50, which is more of utility. So that will give you a nice diversified portfolio. The next section is also one of the key dates for Oceania isn't until May, with the stock flat over the last 2 years and 20% off highs. Are you using this time to accumulate more or see further short-term speed bumps? So in terms of my private portfolio, I haven't added any more Oceania Healthcare into my portfolio just because it's already my largest position. And at the moment, I'm trying to conserve cash. So I haven't been doing a lot of buying. However, in my public portfolio on Sharesies, I adopt a dollar cost averaging strategy. So over time, I will add more into OCA. And hopefully I'll be able to do that this month in order to take advantage of the lower prices. In terms of short-term movements, I don't really know. I'm not into speculating where the short-term share price will go. However, I do know that fundamentally nothing really has changed to the business, and I think it is pretty fairly valued at the moment. And what do you see as Oceania Healthcare's largest current challenges? So the largest challenge, I think, for Oceania Healthcare is its rising costs. So the cost of doing business has been increasing because of two things. First is the supply constraint in the labor market especially. And the second is inflation. The reason why this is an issue for Oceania Healthcare is because they have a very labor intensive care business, and as a result they need to hire a lot of nurses, and as you know, with inflation being higher, people are demanding for more wages, and so the nurse wages have also been increasing, and that usually is increasing at a quicker rate than what revenue has increased at. So that's an issue for Oceania Healthcare. The second one is because of the issue at the border with MIQ. It's very difficult for overseas nurses to come into the country. There's not enough MIQ spots. And this is an issue for the short term, I believe. Once this is solved, then a lot more nurses can come in and alleviate some of the labor constraints that we have in New Zealand. So thanks for your question, Ray. Moving on to the next one, Bent, what's your take on gold as an inflation hedge and insurance against a financial blowout? So if there is a financial blowout, then people will lose faith in the dollar, and when people lose faith in the dollar, they tend to flock towards gold. So gold should theoretically do well, and theoretically as well, gold should be a good inflation hedge. However, as we've seen in the past year, that correlation between the price of gold and inflation hasn't really held true. For example, gold has trended between 1,700 and 1,900 in the past year. However, inflation at the moment is soaring in the US, currently at 7%. So there seems to be a disconnect between gold and inflation. I think from a perspective of understanding the price of gold, in my opinion, it's easier to think of it as supply and demand. If demand for gold is there, then prices of gold will go up. And that's also the reason why I think it's been underperforming, or that relationship hasn't held as consistent as what it was in the past. And that's because a lot of fund flows are going into cryptocurrencies and Bitcoin. So Bitcoin market cap right now is about 800 to 900 billion, depending on price, and crypto as a whole is valued at around 2 trillion market cap. That's a huge difference, but $2 trillion could impact the price of gold significantly. So I think there's some headwinds there for gold, because a lot of millennials and investors right now are seeking Bitcoin and other crypto as some kind of inflation hedge. So Bent is 25% in BTC and wondering about a gold addition in case the BTC thesis doesn't go to plan. So personally, I do have gold miners in my portfolio that are listed on the ASX. It's a relatively small percentage of my portfolio, but that is precisely because of that. That I think that if Bitcoin were to retrace or to lose some of its perception of being a good inflation hedge, then I think funds will flow back into gold. So that's just my take on it. Moving on to the next question, Rainmaker Aussie. Which cryptocurrencies are you bullish on? What's your framework for deciding crypto picks? So in terms of cryptocurrencies that I've invested in the past, I've been quite bullish on exchange tokens. So for example, Binance token, Crypto.com token, as well as KuCoin. And personally, they've done quite well for me. Binance, for example, is my 10-bagger investment, my first 10-bagger investment, and I think it's still the only 10-bagger investment for me. Crypto.com coin as well, or token, has done really well for me. So I prefer to use cryptocurrencies that have a use case, and the earliest use case in my mind was the exchange tokens, because at that time in 2017, cryptocurrencies, we didn't have DeFi, it wasn't popular, or NFTs, and the only use case in my mind was using it as an exchange token and getting some kind of rebate for holding that currency. And so far it's worked well. So that's sort of my framework on deciding crypto picks. At the moment, I wouldn't, go heavy on a specific pick, because this is a very risky space, and any crypto that you have, especially the altcoins, could potentially go to zero. So I would personally prefer to invest in a basket of cryptocurrencies instead of picking an individual one, to sort of diversify away from idiosyncratic risk. One way that you can do that is by using KuCoin. So I'll make a video later on KuCoin, and that was sort of the platform that I was very interested in, because it had a function that allowed you to invest in a basket of different cryptos. So I also do have some KuCoin token. So that's sort of my framework at the moment. All right, so moving on to the next question, William B. How do you suggest new investors to learn how to analyze and research stocks? And also, what NZX stocks are you high on during high inflation in 2022? So I've made a video last year on how new investors could start analyzing and researching stocks. I will leave a link up here. But basically, the starting point for me always is to get an understanding of the business, because once you understand the business, you can understand the risks involved with the business. You can understand sort of how they make money, what the future growth would look like, and what kind of competition they'll be facing, the risks involved, and so on. So once you understand that, then you can move on to analyzing the financials and valuing the business, understanding how much you should be paying for that stock. So it all starts with understanding the business, which is also a Peter Lynch approach, which is why he sort of recommends people to invest in what they know, products that they use or services that they use. It's easier to invest your money in there just because you already have a basic understanding of the business. So that is my preferred approach, but I will leave a link there on a more detailed approach, because I go through in that video step by step. In terms of NZX stocks that I am interested in during high inflation, actually I don't have any good ideas at the moment. Oceania Healthcare is the largest stock on the NZX in my portfolio. But that being said, I don't know if it will do well during high inflation, because already we're seeing the business getting impacted by higher expenses, but not being able to increase their revenue at the same pace. So in terms of high inflation stocks, I may potentially look at Heartland Bank. However, Heartland Bank at the moment, in my mind, is a little bit on the overvalued side rather than the fair value side. The reason why I still hold Heartland Group was because I bought in, average cost between $1 and $2, maybe $1.30, something like that. So I'm just holding that because there's no other alternatives on the NZX. I would look towards the US or Australian markets, however, for more opportunities that will, combat inflation. So for example, I think Centre Group could potentially be an inflation hedge. Centre is a shopping mall REIT listed on the ASX. I mentioned Centre on this channel before, I think back in July 2021 or August, but not many people watched the video, and I think because people weren't interested in a REIT. However, that stock has done relatively well, and what's interesting to note is that it's a shopping mall REIT that has a CPI sort of built into their contract. So if inflation is hot or inflation comes in at 5%, then they'll increase their rents at that CPI rate. So it's sort of like an inflation hedge, and I think it could potentially do well for 2022. Moving on to the next question now, Stephanie. Do you do options/futures? Why or why not? Want to get into it but don't know how. So definitely it is important to get a good understanding on options and futures before you dabble into it, just because these are considered, high risk financial instruments. I personally do not do any futures, but I do sell put options to enter into stocks at a decent price and still get paid premium for it. So in case you don't know, put option allows you to sell a certain stock at a certain price by the expiry date. So for example, if I have Facebook put options at $300, that means I can sell Facebook at $300 when the option expires. So if Facebook drops to 250, then I can sell Facebook at 300 by exercising my option and then buy it back at 250. So I made a $50 per share profit. So when you're selling an option, a put option especially, you are giving someone else the ability to sell. If they exercise that option, then you have to buy the stock at strike price, which in this example would be $300. So essentially it's a limit buy order, but you can only exercise that limit buy order at the expiry date. So at expiry date, the risk is that the stock is much lower than 300, but the upside is that you get an option premium. So depending on the volatility of that specific stock, you will get a premium paid. So it's just a way for me to enter into stocks that I like at a price that I'm comfortable with, while collecting option premium. So if you're interested in that, definitely check out Interactive Brokers. Now moving on to the next question, what's investing? What do you value Tesla stock at? So I've actually done an analysis on Tesla stock. I didn't post it on the channel, but I did an analysis last year and I valued Tesla stock at about $600 per share. So if the share price drops to about there, I might actually buy Tesla stock, just because in this past year, a lot has happened to Tesla, and by and large, the news that have been released by Tesla has been very positive, and I've seen a lot of momentum in the company, and anecdotally as well, I see a lot more Teslas around Auckland. Driving down to Rotorua, I've seen a lot of EV chargers now popping up. Tesla has grown into its valuation, and I think $600 per share, it could potentially be very optimistic, but in this current market situation, we don't know. Maybe it could drop down there, maybe not. But if it does, I would not hesitate to actually add some stock in Tesla. So that's my valuation. And the last question that I have was from Hendrikus. Sorry if I'm mispronouncing your name, but this was a question that I got on Instagram. The question is, what's your opinion on Boglehead strategy on subreddit, aka VT and Chill? So Boglehead strategy, from a quick Google search, is a strategy that is just to dollar cost average into an index fund over the long term. And the name obviously comes from Jack Bogle, which is the founder of the Vanguard funds. So this is an ETF approach in investing, and a passive investing approach. I have no problems with that, and I think it's actually a great option for people who are too lazy to research stocks, or not interested in stocks, but still want to do well over the long term, with building a retirement plan. This is my preferred strategy, of course, if you are that person, and actually for most people who overestimate their ability in picking stocks. So most people, it is more worthwhile to just dollar cost average into an ETF. Getting into index fund investing is probably a great way to get started into investing, especially if you're new and looking to invest, because VT is the Vanguard Total World Index, and that is a very well diversified ETF. You get a lot of exposure to companies around the world, so it is very difficult to go wrong unless the entire stock market crashes. Then you'll do bad. But most cases over the long term, you do about 7 to 8% returns. And I've seen a lot of people that I know, friends as well, got started in investing through ETFs and then later on moved on to picking individual stocks once they got a better understanding of, analyzing a company and so on. So I'm not saying it's the best strategy, but for most people it probably is. That you can outperform the market if you have the right investing mindset and investing strategy. But for most people it's very difficult to do, and in most cases the Boglehead strategy probably works best. So that's all of the questions that I have for today's video. If you enjoyed it, be sure to hit like and subscribe, and if you want me to do more of these, leave a comment down below as well. Thank you guys for watching. Until next time, take care.